Landlords across the U.S. can't make a profit due to rising housing costs and inflation. I'm Tony, and this is Real Estate Investing and Landlord News. All right, so I have an interesting topic for you today, and it's going over the whole inflation issue. As I've mentioned many times before, the cost of everything has increased, not just for the tenants, even though that's what they believe, right? For us landlords as well. So every time I look at my bills, I see, hey, the cost of everything has increased, okay? The cost of my insurance has gone up. All of my property taxes on every single property that I own have increased. You know, the cost of maintenance. When I call someone to do repairs at my place, it's gone up as well. And I know landlords across the country, they're experiencing the same thing. You know, utility costs going up. Heck, even our loan rates, right? Our loan rates have gone up. So when you have a mortgage that you have to refinance, well, guess what? You're going to be stuck with a lot higher bill than maybe what you had before or what you were expecting. So yeah, this is really bad for landlords, and it's gotten to the point now where there's a lot of landlords all over the country who are struggling to make a profit. In some places, they can't make a profit at all. So when I read about these stories about, hey, these tenant right advocates, etc., saying, oh, well, they don't need to raise rents. Well, those people are living in la la land, okay, fantasy world, because they have no clue how much our expenses are. They have no clue what we have to do to keep our properties, and run our businesses. So they would put us out of business as long as they could live in a cheap property. Okay, that's how these people are. They have no common sense whatsoever, and then they'll complain. Well, I don't understand why my building is so dilapidated. Well, you wouldn't let the landlord raise the rent. The landlord wasn't able to do any repairs. That's the simple story. So before I get into the article, go ahead, hit the like, subscribe button, maybe leave a comment down below. Let me know what you think. Are you a landlord who's been struggling with the increased cost of things? And what costs are you experiencing right now that have really gone up in the last couple of years? Like I said, I'm experiencing insurance and property taxes are the big ones for me. I'm sure most landlords, it's the same way. So, it's crazy just thinking about it. Fortunately, I don't have to pay any of the utilities for any of the units I own, but I know a lot of landlords do have to cover that cost. So yeah, not a good time right now to be a landlord. And I know there's a lot of people who want to get started in the business or people who want to expand their portfolio. And if they're anything like me, they're kind of questioning, okay, well, what's the game plan? What are we going to do going forward? And that's a good question. Okay, so let's get into the article. This article is coming from the Wall Street Journal, and it says, for landlords, rising housing costs make it harder to earn passive income. Higher mortgage rates and inflation change the risks and rewards of investing in rental properties. Yeah, and obviously the Wall Street Journal is behind a paywall, but I was fortunately able to copy this article into an email, so I'll be reading from that right now. Many Americans dream the path to building wealth is like a trip around the Monopoly board, buying up properties that generate rental income. That can be true, but financial advisors warn the costs and aggravations of playing the landlord game are increasing. People thinking about becoming landlords might have a tougher time turning a profit after a year marked by higher home prices and mortgage rates. Rents are up too, but because of inflation, so are the costs of repairs and routine home maintenance. The benefits of owning a rental property, passive income, and tax breaks have been touted frequently on YouTube and TikTok in recent years. However, anyone planning to buy a rental property right now should factor in the likelihood of higher costs and unexpected expenses. Profitability, especially in the short term, certainly isn't guaranteed, said Rick Sharga, Executive Vice President of the Market Intelligence at Real Estate Analytics from Atom Data Solutions. Yeah, well, when you first buy a property, and at least speaking from my experience, the first 6 months, I'm really not turning a profit at all. Okay, I'm busy doing a lot of maintenance and repairs. I usually have tenants who want to vacate almost immediately after I buy the property. So yeah, it's going to cost you money when you're first getting started. Once you get the property stabilized, it should be good. But, just like anything, you got to do your numbers. You got to know your numbers. You got to know, okay, am I going to be able to make a profit? Is it as easy as it was back when properties were super cheap, like when I started investing? No. Okay, it's never going to be like that again. the markets are going to be different, and we have to come up with a better strategy. So yeah, it's going to be harder for people who want to get started in this. I think the point where landlords are at now are the ones who've been in it for a while. We are really benefiting, especially those of us who have 30-year fixed rate mortgages at super low interest rates. Okay, we are doing okay, but where do we go from here? Landlords often rely on debt to fund their purchases, especially as home prices stay well above their pandemic levels. As interest rates rise and recession fears mount, taking on that debt becomes riskier and more expensive. The mortgage rates for a typical 30-year loan for owner-occupied homes rose from below 4% to around 7% in the last 6 months, though have eased a bit recently. Investor loans are more expensive, with interest rates in the 10 to 12% range, depending on the type and term of the loan, up from about 7 to 9% earlier this year, said Mr. Sharga. Yeah, and I've experienced that. Okay, so I think I paid around 7% on the most recent 2 duplexes that I got. So unfortunately, because I'm buying after the interest rates rose, I got to pay those higher interest rates. But the other good factor, like I said, I refinanced 3 of my properties this year, and I was able to get rates under 4%, or right at 4%. So yeah, I mean, it's a good thing, but you know what? There's going to be a lot of landlords who get caught up in this. There are going to be landlords who aren't able to deal with the more expensive cost of borrowing money, and they're going to have to sell those properties. And unfortunately, what we're going to see is, because the interest rates are so much higher, there's going to be a smaller pool of buyers who want to buy the properties for what landlords or for what investors think they are worth. So this could lead to a decline in housing prices. Okay. And I'm talking particularly about multifamily real estate. Now single family operates a little bit differently because you have a lot of owner occupants who are buying as well. But when it comes to investors, right, we're the only ones buying multifamily. Okay, you're only going to be dealing with investors, and other investors aren't going to buy this property unless it cash flows up to their level. Okay. When applying for a mortgage on an investment property, buyers need a larger down payment than for a primary or vacation home, and might need to meet stricter lender requirements, said Robert Heck, Vice President online mortgage marketplace Morty. Lenders usually require a down payment of at least 20% because they are taking on more risk, Mr. Heck said. Lenders have firm underwriting requirements for investment property loans, including higher minimum credit scores, and a more desirable debt-to-income ratio. They typically require greater cash reserves than they would for a primary mortgage, Mr. Heck said. If you're putting down more down and your rate is driving up your monthly mortgage payments, then you are under more pressure to keep your property fully occupied. So yeah, and everything that lender said is 100% correct. I mean, the lender obviously knows more about the lending requirements than even me, but the truth of the matter is, when I go in there, I have to have 6 months of reserves for every property I own and the property I intend on purchasing. So that's a great deal of money. Once you get up to a certain level and you own so many properties, that's what they start requiring of you. Okay, so yeah, it's not as easy for someone like me who owns, I have 16 units, as it is to a person who just has 1 or maybe 2 investment properties, right? But the thing is, man, all of the things combined are really piling up on top of landlords, and we are going to go for, I think, a few years where things are going to be a little bit slower in the real estate market in terms of investment property purchases. I think a lot of landlords are going to slow down a little bit. Now, there's going to be some in there who are aggressively going to try to expand their portfolios, but I imagine that a lot of landlords are just going to say, hey, we're going to sit still, maybe see what the, mortgage rates are going to go down to, and see if housing prices decline a little bit, because, nobody wants to buy a property right now and then find out, well, because of all the stuff going on with the rest of the economy, well, prices ended up declining, so I overpaid for this property. So yeah, I mean, this is an interesting situation, and part of me is saying, hey, I need to wait and see as well, but I'm afraid that I'm going to miss out on an opportunity. But taking a good look out there, I haven't seen the type of opportunities I'm looking for. And I'm always looking for, and I'm looking for duplexes, just simple duplexes. That's what I enjoy. 2 to 4 unit properties. And, something I can purchase with a residential mortgage. I can still get 2 more, and then I'll have my limit of 10 at that point. And that's the sort of thing I'm looking for. So hey, if you're watching this video and you happen to have that sort of property for sale, and you want to just throw it down in the comments, or maybe you can just shoot me an email, and tell me about what kind of deal you have for sale in the 2 to 4 unit range. Okay. And oh yeah, my email is Tony, Tony, at NorthOmahaInvestments.com.